The ground beneath the stock market is shaking like a very small earthquake now at this point in time. The nasdaq, from its recent highs, is now down about 6%, but it's so much more extreme than what you see at the index level at this point in time. Look at some very popular stocks on YouTube, on X, that are talked about a lot, and you're going to see severe damage in these stocks. Look no different than Duolingo stock. Very popular stock out there. In the past 6 months, this stock has fallen 66%. Oh my gosh, look at him stock. It is down 50% from the highs it reached just this summer now at this point in time. Look at Palantir. Palantir came out with unbelievable earnings, one of the best earnings reports you probably have seen this entire year from any company. And despite that, over the past 2 weeks, Palantir stock is down over 18 percentage points. Robinhood stock, which that company's fundamentals have been incredible. That stock since Halloween has lost almost a quarter of its value. Seems like Halloween was just yesterday, right? It's lost almost a quarter of its value, now down over 24 percentage points. We have an unbelievable divergence between Bitcoin and gold going on. Bitcoin is now negative, ladies and gentlemen, for the year in 2025, while gold's sitting on over a 50% gain. But look at what has happened really over the past 2 months. There's been a clear divergence where it was Bitcoin was winning this race this year, and suddenly gold took a massive leg higher, while Bitcoin just absolutely has fallen quite substantially over the past month and a half to 2 months now at this point in time. Now, if you've been watching my content for months and months, you know I've been speaking countless times about how this reminds me of 2018 this year. It's just an inverse. 2018, we had a small fall in the early part of 2018 and a large fall at the end of 2018. This year is reminding me of the same exact thing, just an inverse, where this year we had a huge fall earlier in the year, and then we're going to get a smaller fall essentially at the end here of 2018, and it's playing out exactly how I thought it was going to play out. Now, in this video here today, 2 core subjects we're going to speak about, okay? One is, am I scared we're about to go into a 2022, where we're going to see this NASDAQ fall 35% plus? Where this is going to become severe damage out there in the market, from like, ooh, it was, just speculative stocks were falling to like, oh no, the whole market's going to go through a massive crash here, okay? We'll speak about that at the beginning of this video. Then from there, I want to get into 10 stocks I bought here today, why I bought those particular stocks. Those are the 2 subjects we'll cover in this one. This is an absolute banger of a video. I've been prepping this all day for you guys. I hope you really enjoy this one. There's one thing and one thing only I need from you guys, and if you could just hit that little thumbs up icon. That's all I need from you. I appreciate every single person that's already done that for this video. And if you haven't, please help a man out. I've been prepping this all day for you guys. Additionally, make sure you subscribe to the channel. If you like to see my videos, you want to see more of them, make sure you're subscribed. Higher probability YouTube will show my videos to you in the future if you're subscribed. Lower probability if you're not subscribed here, okay? Also, one piece of housekeeping here. We have a massive sale coming up for 1000xstocks.com, Black Friday. Very proud to announce that deal. We're going to have it on a 1-month membership and a 3-year membership is what the deal will be for that. So pinned comment down there. Click on that, put in your name, put in your email, and you might want to put in your phone number. Every year we do the Black Friday sale on something. Sometimes we'll do it on Patreon. Sometimes we'll do it on 1000x, right? Every time we do that deal, once a year, people will enter in their email wrong, or they'll enter in their email and then they'll have missed the sale because they get a million other promotional emails on Black Friday. Like, this is the deal you actually want, okay? So you might want to put in your number as well so we can text over the deal when that does drop on Black Friday. Additionally, when you receive the deal, we will send you your Steel membership card in the mail to your house, apartment, condo, wherever you reside at, okay? So that's going to be very, very exciting. That is, if you're not part of my private stock group, you have to have 1000x. It is absolutely key, okay? One thing, if you don't want to be part of my private group, like that's too much for you or something like that, 1000x, you gotta have this. So every single person watching this video, you need to be signed up for that deal. It is well worth the price of admission, I can tell you that much, okay? Alrighty, number 1 here. Am I scared we're about to enter a 2022? Well, you got to understand, in 2022, the market fell. In terms of the NASDAQ, it fell high 30s%. I think it was like 37.8% or something like that, peak to trough, okay? Now, the thing you got to understand about that drop that year was that was the most severe drop we had in the NASDAQ in terms of duration and downside move since the great financial crisis of 08-09. The great financial crisis, from the peak of 07 to the trough in early 2009, the NASDAQ fell just over 50%. And that was a severe, we can call it about a year and a half long crash, if not a little over a year and a half. Brutal. This was almost as brutal, where it lasted around a year and we fell about 37%. So it was quite severe. And so just understand those situations where you're talking NASDAQ down 35+% over a period of a year doesn't happen very often. And when it does, you better take advantage because that is few and far between in regards to that matter. Okay. Now, that you got to understand why the market fell in 2022 because there was a few reasons, but I'm going to show you the biggest reason. Okay. So if you're wondering, are all these big tech stocks about to crash huge like they did in 2022 where you saw a ton of them go down 40, 50, 60, 70, 80%, right? You got to understand why that happened. Look at a company like Meta, for instance. This is my biggest investment in the public account, okay? And the stock I bought heavy in 2022 as it was crashing. If you look here, Meta coming out of Rona, right, was showing unbelievable accelerating growth from 21% to 33%, 47% revenue growth, 55%. You have to understand, when it comes to big tech stocks, growth stocks, people buy these companies for the revenue growth. Margins are cool. Profits are cool. Customers are cool. Other metrics are cool. Valuation is cool. Revenue growth is king when we're talking big tech and we're talking tech stocks in general. Revenue growth is king. So what happened is Meta's revenue growth decelerated substantially from 55% growth in the summer quarter down to the September 30th quarter, 35%. Now those results, keep in mind the quarter ended September 30th, but the results actually came out right when the market peaked in that Q4 2021 timeframe. They were right around November-ish, okay? And guess when the market peaked? Right around November 2021. So here we are. We're in a situation where the market peaks right as Meta's growth rate decelerates off a cliff, right? We're talking about when you go from 55% revenue growth down to 35%, people are like, that's such a massive deceleration. They start worrying about what's next quarter going to be if it's decelerating that rapidly, right? And then what happened with Meta? They came in with then 19% revenue growth, then 6% revenue growth, then their revenue started to go negative, ladies and gentlemen. And so if you're wondering, how did Meta stock crash 70%? Listen, the Zuckerberg spend on the metaverse and all those things and what happened with their margins, profits and all that, it mattered. But it all pales in comparison to what happened with the revenue. That's why Meta stock crashed. When you go from growing revenue 55% to your revenue goes negative, your stock is going to get obliterated. And that's exactly what happened with Meta stock. It fell 70+% in that crash. Unbelievable fall, okay? Now, was it just Meta? Well, look at this. I think this is very important. Oh my gosh, this is so important. I show you what's going on right now. Because if you're wondering, is this occurring with Meta right now? And is this occurring with tech stocks? Let me show you this because it's very important before we move on to the next stock, okay? This is extremely important. Listen. What we're seeing with Meta right now is not revenue growth deceleration. We're seeing revenue growth acceleration, okay? So the growth rates are getting stronger. It went from 16% growth to 21% growth to the latest quarter, 26% revenue growth. So we're in a revenue growth acceleration phase right now. We also aren't coming off of some weird situation where growth rates looked insanely strong because you came off of Rona. We don't have stimulus check money that you had in that whole back situation back in 2021. You don't have any of that you're dealing with, okay? And so do keep that in mind. If Meta's revenue growth starts to decelerate in any substantial way, then we can have a problem with Meta stock, right? But is Meta stock going to go from 26% revenue growth to, negative revenue growth over the next few quarters? I don't think there's a very high probability of that. I think if anything, Meta's going to keep in that 20% plus range for quite some time. Best case scenario, maybe they push it up to 30 or 35% or something like that. So we just don't have the same ingredient when it comes to that, okay? Now, look at Shopify stock. Shopify stock is a perfect example of a stock that got absolutely obliterated in that crash. It fell 80%, ladies and gentlemen. That stock went from $150 something stock down to $25 in the summer of 2022, right? Here's what happened with Shopify. They went from revenue growth of 97%, 96%, 93%, 110%, down to 56%, then down to 46% in that peak period. And then they kept decelerating down to 41% growth, 21% growth, and at the lows, 15% revenue growth, okay? And so if you're wondering, why did Shopify stock fall? That's why Shopify stock fell. The revenue growth was insane. And then it was like, oh, this is good, but this isn't what it was. And then Shopify had an insane valuation on it at that particular time, right? Look at Netflix. Netflix stock fell over 70%. What happened with Netflix? Well, look at this. 2020 and 2021 into 2021, right? They were growing revenue consistent in that 20% range. So people thought of Netflix as like, oh, as a company, we're just going to be able to grow 20% a year. Like, we're good, right? All of a sudden, what happens? Right as the market was peaking, revenue growth decelerates down to 16%. Then they put up another 16% number, and then down 9%, 8%, 5%, 1%, right? That's why it happened. It's not like this, the 2022 downfall was just this or that. It's because all these companies that matter the most to the market, all these tech companies, had very high valuations, and their revenue growth went from like insane to like they're barely growing, or their revenue started to go negative. Look at nvidia. Nvidia is one of the best examples of a shocking fall in that stock and what happened with the business model. The stock fell 50%, but that doesn't even show the most insane thing that happened. They were growing revenue 61%, 83%. Look at this quarter in 2021, 68%, 50%, 52%, 46%. And they went from 46% revenue growth down to 3% in a quarter over quarter basis. In a quarter over quarter, 46 to 3. You know what happened the next quarter? Negative 16% revenue. You know what happened the next quarter? Negative 20% revenue. Unbelievable. What happened with NVIDIA's business model? Did NVIDIA deserve to go down 50%? Honestly, when you go from 50% plus revenue growth down to negative 16, negative 20%, yeah, NVIDIA deserved to fall. Maybe, honestly, you probably should have fell even more than 50% in that situation. Now, if you had a longer term vision and a longer term horizon, NVIDIA was an incredible buying opportunity in 2022, right? But at the same time, like, you got to understand, it didn't fall for no reason. It fell for a great reason, right? Now, this next point I got to bring out, very, very important, okay? Listen, AMD. AMD also fell in that 2022 crash as well. AMD stock got hit hard. And you could make an argument that AMD was actually putting up more impressive numbers than NVIDIA in 2022, but that didn't mean the stock didn't get hit. It got hit as well, 50+%, right? Just like NVIDIA did, okay? Now, if we're going to look at the biggest 15 companies that matter the most to S&P 500, what are we likely to see in 2026, in my opinion? Accelerating growth or decelerating growth, okay? In terms of the revenue growth they'll put up in 2026 as a whole for the year versus a whole for 2025, is that growth rate going to accelerate or decelerate? Well, here's what's going to happen. NVIDIA, no question, they're going to decelerate. Anybody that knows anything about NVIDIA's business model all knows revenue growth will decelerate. In 2026 versus 2025. There's no question about that, right? Apple's likely going to have an acceleration of revenue growth in 2026, and that's really because this iPhone generation is selling really, really strongly for them. Microsoft will likely have an acceleration as well because of their cloud side of the business, their Azure business. Amazon will likely have an acceleration of growth as well because of AWS specifically. They're also pushing hard into grocery, so I wouldn't be surprised if grocery growth rates are very, very strong for them next year. But that AWS growth now pushing 20% plus, that's going to matter significantly. Google, I would say, also accelerating as well because of cloud business as well. Broadcom, acceleration as well because of the custom chips there. Meta looks like they'll accelerate revenue growth in 26 versus 25 as well, because if you see the trend on where revenue's headed, like, it looks pretty darn good. I think Tesla's questionable. I don't know if they're going to accelerate or decelerate growth. Berkshire Hathaway, same exact thing as far as their growth rates next year versus this year. Questionable. Eli Lilly, questionable. Walmart, questionable. JP Morgan, questionable. Visa, questionable. Those are all like, I don't know, I could see it going either way. Oracle is going to accelerate growth as well, quite substantially next year versus this year. So overall, we don't have the same dynamic going into 2026 that we had, when we were going into 2025, where basically you could run through almost every company and say they're about to have major decelerations of growth rates in revenue. We just don't have that. We have the substantial amount of these companies is going to be accelerating revenue growth. And almost no one's going to be decelerating growth other than NVIDIA, right? And NVIDIA is still going to put up amazing numbers. They're going to still put up amazing growth rates in 2026. It's going to be at a slower pace than obviously what they did in 2025. But we don't have the same setup, ladies and gentlemen, okay? Now, additionally, look at a stock like Oracle, because I remember I talked about Oracle here at the end. They're going to accelerate growth. This one's pretty crazy. Since they made their OpenAI announcement, on September 10th, 2025, right? The stock has lost all of its gains and then some. It's now down 36% from where it was after that announcement came out. Like, what a shocking fall in regards to Oracle stock, right? Now, AMD, we didn't talk about AMD in regards to top 15 because it's not a top 15 company, but it's a little outside of that top 15, right? It's still one of the biggest companies that matters, one of the most to the stock market, right? You got to understand with AMD, they're about to go through a major growth acceleration phase in 2026 and then into 2027. So you're likely going to see revenue growth accelerate substantially in 26 and then accelerate again in 27, which is pretty special. And so you got to understand AMD is a very important stock to the market nowadays, not because of its market cap, although that's pretty big as well. It's like a $400 billion market cap, right? It's not big compared to these other companies that are several trillion. It's very important stock to the market from the respect of like people that are growth investors look at a stock like AMD. And if AMD stock price is doing well, people feel good about the market. If AMD stock price isn't doing well, people aren't feeling very good about the market, right? And so just understand like AMD sets up phenomenal for the next 24 months. And I think that's another reason why it's going to be hard to, get this market down in any substantial way when you got a stock like AMD that's going to be running heavy this next 24 months, right? Now, additionally, you got to understand what we had in 2022 outside of the thing that mattered the most, right? People will say this, what I'm about to show you right now, mattered the most. That's people that don't know the market very well. Okay, the thing that matters the most is always big tech and growth rates. Those are the companies that matter the most. The next thing that matters after that is what's the Fed up to? The Fed is very important, right? Not the most important. If all these big tech companies, revenue growth, all starts to decelerate substantially next year, it doesn't matter if the Fed's lowering, raising, it doesn't matter what they're doing, the market's going down. On the flip side, you look at the Fed still going higher in 23 with the Fed funds rate. The Fed kept taking Fed funds rate higher in 2023. And yet what happened with the market? It went phenomenal. You know why? Because big tech outweighed all that. Big tech started accelerating growth rates again, and everybody started buying the market. This shows you big tech is more important than the Federal Reserve nowadays, ladies and gentlemen. Okay. Now, in regards to what we had to deal with in 2022, another part of that was the Fed kept raising rates aggressively, right? So in 2022, you had to fight the Fed, right? Now, you also had to fight the Fed in 2023 and you won that fight. But in 2022, you didn't win that fight, right? Are we going to have to fight the Fed in 2026? The answer is no. We're not going to have to fight the Fed. The Fed's going to likely be lowering rates in 2026. And so we don't have a fight the Fed situation going on, right? Now, additionally, you got to understand there's some things that are happening on the government side that are quite substantial. One is this. Have you heard of the BBB? We're talking about the Big Beautiful Bill, okay? The Big Beautiful Bill that was passed this year. Now, what does it mean for this year in terms of 2025? A whole lot of nothing. All the really positive effects that are going to come from the Big Beautiful Bill start to hit in 2026, okay? So this is quite substantial. And so if anything, that's going to add some fuel behind the economy, the markets, and things like that in 2026 and beyond. So do keep that in mind. That's just about to start to hit, okay? Additionally, T-Man is talking about $2,000 tariff dividend checks coming by mid-2026. We'll see if that does happen. That could be definitely a very bullish thing for the economy, a very bullish thing for companies. We know if you give people $2,000 stimulus checks, you know what they're going to do with that money? Do you know what the majority of people are going to do with that money? Unfortunately, they're not going to invest it. And unfortunately, a lot aren't going to pay down debt either. You know what they're going to actually do with it? They're going to go buy new iPhones with it. They're going to go buy new stuff on Amazon. They're going to go spend the money in the economy. They're going to go buy new Nikes. They're going to go to the mall. Like, it's just humans, man. It's just humans. Like, I don't know what to tell you. Like, if everybody was, super financially responsible, like, everybody would be sitting on, tens of thousands, hundreds of thousands of dollars or millions of dollars in net worth, right? And that's just not the situation. Like, far majority of individuals out there, basically have no net worth of any significance at all, right? And it's because you give them money and they're going to find a way to spend it, right? And that's exactly what will happen. Like, they'll use it toward a down payment on a car or something like that. And so it would be a huge boost to the economy. There's no debating that, right? Now, there's also worries about that could fuel inflation in 2027 and after, and that's a possibility, okay? But the bottom line is things like the Big Beautiful Bill, and then if you do tariff dividend checks, $2,000 to the massive amount of Americans, like it's going to be bullish for the economy and bullish for the market, right? There's no debating that. So the moral of the story is we just don't have the ingredients for a 2022 type meltdown of a 35% plus drop in the NASDAQ. We had all the ingredients for that sort of big drop in 2022, and we got it. You had the Fed working against the market while all the big tech companies' revenue growth completely died and started to even go negative, right? It wasn't even that they were decelerating. And some of those companies I just ran you through, their revenue started to go negative, right? And also you had nothing really like positive from like stimulus checks anymore at that point in time, or like, things like the big beautiful bill. So like you had the ingredients to get a massive downfall in the market. You just don't have that now at this point in time. Okay. Now, in regards to what about this drop we're having here at year end, like how much further could it go or not go and those sorts of things, right? Well, remember, like I said at the very beginning of this video, we had a major downfall at the beginning of this year, which is not the same as 2018. 2018 was small fall earlier in the year, massive fall late in the year. I think we've got the inverse going on, where we're going to get the small fall here at the end of the year where we already had the massive fall this year, right? Now, in that fall, and when I say fall, I mean like literally the market going down, right? In that Q1 like drop in the market in 2018, the NASDAQ fell about 10%. That's exactly what I'm expecting. I'm expecting a 10 to 15% drop in total for the NASDAQ. We're already at about 6%, so you can say we're already over halfway there, around halfway there right now, okay? And so that's what I'm kind of expecting in regards to this. Now, am I going to wait to buy until like, exactly when we hit 10% down or 12% down? No, because we might not. Like, what if today was a low? Did we consider that? Like, that's a possibility. You can't ever bank on absolutes in the market. Even when you're investing in stocks, you can't ever bank that you're for sure right? That's why I stay diversified. If it was as simple as like I ran projections on a stock and this stock said I was going to get the highest CAGR of any stock, then you would say I'll just go all in that stock. Why do I not do that? Well, because guess what? That might not happen. So you can't bet on absolutes in the market. That's why you stay diversified. That's why you go through a range of outcomes that's possible. You might think, okay, this stock's a great opportunity, so you invest into that stock, right? But it doesn't mean you go all in. I might think like we're going to probably drop in that 10 to 15% range before it's all said and done here on the NASDAQ from recent highs. But that doesn't mean I'm going to bank on that and like I'm going all in right when we hit 10% down, 15% down. Like there's a range of outcomes. We could go down way more than that. We could reach the bottom today or this week. Like, you know what I mean? And we never even hit a 10% down. Like all those are possibilities, right? Now, additionally, you got to understand what is occurring here is very good and healthy for the market, and we need this in the worst way. People think like, oh no, just the market needs to go up every day, every week, every month. No, ladies and gentlemen, we need this in the worst way, what's going on right now. Listen, margin got out of control recently, okay? Almost $1.2 trillion out on margin here in this latest month from what we had back in October, right? The margin's been going insane. People are taking out margin like it's nobody's business and loading up on stocks. In order to clean up that margin mess, you have to have the market get hit. And not just the market. You have to have the stocks that people like to margin out on. Usually what people like to margin out on is stocks that are usually high growth, more speculative, more retail trader type names. So by having those stocks drop 30, 40, 50, 60, 70%, you're going to get rid of a lot of that margin speculative activity of people just going crazy on that. You have to flush it out, man. It has to be done. Like, I don't know another way to put it. It has to be done. And so we're at that situation now at this point in time, which is very healthy. Like, we got to get rid of this margin and this amount of speculation out there in the market. And additionally, this is really big, ladies and gentlemen. We need to get the focus back on fundamentals, right? You got to understand, like, when you're in a very, very bullish market that just seems to go to the sky, people stop focusing on fundamentals. A lot of people, right? And they start like trying to make moves in the market that don't have anything to do with revenue growth, net income growth over time, what a fair PE ratio would be over time. They don't run projections, right? Like we have 1000xstocks.com. We run all the projections. I run projections on every single one of my stocks. And I do not buy a stock unless the projections say this is a very good situation when I run my bull, bear, and base case for that stock. And what happens is when the market's really running hot, People stop focusing on fundamentals. They think they got some new hack. Like, oh, I'm going to pay attention to the trend of momentum, and I'm going to pay attention to blah, blah, blah. Like, they always come up with some new excuse on like something to focus on outside of just the raw numbers. And it always comes back to bite them. And so what's going on right now is needed. It's healthy, because I see some people out there and they're just not focused on the fundamentals. And that always ends badly. You don't focus on the fundamental, you think you got some new hack on the market. Guess what? You don't. I hate to break the news to you. You don't have some new hack on the market. You know what? You make a lot of money in the stock market over time. Stay diversified. Run your numbers on your companies. Make sure you understand the business models very well. Buy when you're in when the valuation says buy, right? If you get a crash in the market or correction in the market, you better very much take advantage of that. It's the same old game. It's the same old game for the past 100 years, and it's the same game today. In the short term, anybody could throw anything out there. No different than, I live in Vegas. We go down the strip right now. You want to go to the Wynn? We'll go to the Wynn. We go play roulette, right? And I can go be like, I got some new strategy on roulette here. It's come up red 5 straight times, so now it's going to come up black 3 straight times. So I go bet on black and I hit it. I'm like, oh my gosh, I'm a genius. I found a new strategy to beat roulette. You just got to, go against the color that's been coming up. No, it doesn't work. And so what happens in the market, and I'm seeing a lot of people, they think they got some new hack, some new strategy, because we just been in a raging bull market without understanding, no, it always comes back to the fundamentals. And every time the market starts to get shaky, that's when people start to realize they're swimming naked out there, and they better get focused back on the fundamentals. So what's going on right now? This is needed in the worst way, right? On 1000xstocks.com, one of the great things you guys are going to get access to when you get that sale is this education portion. I would say a lot of people probably even watching this video right now, sadly enough, don't know how to do this stuff. They don't understand balance sheets on a high end, income statements, cash flows, how to perform SWOT analysis, strong moats versus weak moats on a business. A lot of people probably might not even know what a moat is, right? How to actually value dividend stocks, how to actually value growth stocks, portfolio management, all this stuff. Like advanced option strategies, basic option strategies. Like I'm sure there's a lot of people that don't understand that stuff, and it's time we get focused on that, ladies and gentlemen. The time period of like, oh, I found some new hack on the market. I don't need to study on the market. I don't need to run numbers. I'll just throw money out there. Like that's over. It's over. It's long over, ladies and gentlemen. Okay. Now it's time to be the big boys and big girls and make some actual money out there. Okay. Number 2, what are some stocks I bought here today? Why did I do it? Okay. Well, first off, I did not get here by worrying about the next 3 to 7 weeks, the next 3 to 7 months in the market, right? Whatever is going to happen in the market short term is whatever is going to happen. This NASDAQ goes down 10%, or maybe it goes down 15%, 35%, 50%, whatever, okay? At the end of the day, that's going to be what that's going to be. I cannot control whether the stock market goes up or down in the short term, as you cannot control if the stock market goes up or down in the short term, right? I concern myself over the next 3 to 7 years. And by doing that, I'm able to live this lifestyle I live, right? If it wasn't for that focus over the coming years, I would not be able to afford the homes I live in. I would not be able to afford the cars I drive. I would not be able to afford the vacations I go to, like going to a restaurant. I don't have to worry about the price, any of that stuff. There's no way I'd be able to do this if it was like I was focused on the next 3 to 7 weeks, the next 3 to 7 months. No, I'm focused on years, ladies and gentlemen. Years, right? That's how you climb the ranks from a kid that was cleaning dishes in the back of Einstein Bagels for $7.50 an hour into I look for beaten down dog stocks with bright futures. I love to look. These are sorts of opportunities that you can double, triple, quadruple, 10x, or more your money in these stocks over time, right? I look for the beaten down dog stocks with bright futures. Good example of this is ELF in 2019. For those of you that have been following me for years and years, you know about that one. Tesla obviously was one of my most famous successful investments. Meta in 2022, Palantir in 2022, right? SoFi in 2024. What a buy that was. AMD this year in 2025, right? These are some of my most famous buys since I've been on YouTube. And those companies, when I was buying them, they were not in favor. ELF, when I was buying that back in 2019, it was $7 stock. Tesla, since I bought that stock back in 2019, I think that stock's gone up like 2,000 or 3,000%. No one wanted Tesla. Tesla was dead money for like a 5-year period. Meta 2022, the stock was down 70%. No one wanted that. Palantir 2022, the stock was down like 80%. People thought Palantir was a joke. Like, oh, what a joke of a company that is, right? SoFi 2024, that was a $6 stock back last year, right? And I was loading up shares, and man, what a game-changing stock that's been. And then AMD this year, like AMD, woo-wee. No, I mean, AMD was an ultra-hated stock just 6 months ago, right? Like people were still selling that stock at $80 6 months ago. Now those same people are willing to pay $250 for it. Like what a change that's been, right? Imagine what they're going to be willing to pay for AMD a year from now, 2 years from now. Can you imagine? Can you imagine that, right? So that's what I like to focus on. Beating down dog stocks with bright futures. That's where I get some of my best returns ever, right? Now, Steve Wynn, so I have a picture of Wynn Resorts on my main phone and my backup phone and my backup phone, right? And the reason being is I always respect Wynn Company so much, and I love Steve Wynn. Steve Wynn, who obviously doesn't have anything to do with the company anymore, but what a legendary businessman. He always had so many great things he could teach you about business. And one of his famous quotes I remember him saying is he said, "In the valley of the blind, the one-eyed man is king," right? Let that sink in. In the valley of the blind, the one-eyed man is king. And it makes me think about the stock market, because the stock market so often, everybody's so blind, right? They follow each other around, especially a lot of these Wall Streeters. They all buy the same stocks at the same time. They all sell the same stocks at the same time. They're really just blind out there. Like, they can't see a dang thing. And so all you got to do is come in and like have one eye open, and you can see so many opportunities out there that these Wall Streeters are completely missing. And if they weren't missing these, they wouldn't have been selling Meta for $88 in 2022. They wouldn't have been selling Palantir at $5.98 and $6 and $7 in 2022, right? They wouldn't have been selling AMD this year at $80. Like these things wouldn't have occurred if they actually just had their eyes open and they could like see what's actually going on out there. But they're blind. They're completely blind. So here I come along. I'm like a one-eyed man out here, like, and like I look like a genius. I look like the greatest thing because it's like these guys are blind out here, like completely blind, right? So just understand that. That's a great quote from Steve Wynn, and it's the truth. Okay. Alrighty. So what are some stocks I bought? Well, okay. So first up, Fubo. I bought 1,444 shares of Fubo here today. That was around a $5,000 move. I got those shares at $3.42. Fubo, I mean, my gosh, they benefited massively from this YouTube, TV, Disney situation here recently. That was a mess. It was an absolute mess. And from the Google Trends data, Fubo went to the moon in regards to Google Trends data. They must have got so many signups over the past couple of weeks, as well as Hulu Plus Live TV, which now they own. I mean, gosh, both those Google Trends went crazy. None of it's reflected in the stock. I don't even think the acquisition of Hulu Plus Live TV's, reflect in the stock. I don't think their future margins start next year and profitability are reflected in the stock. So, like, I don't think anybody's ready for what Fubo is about to do over the next few years here. And so pretty darn exciting, and what a missed opportunity for a lot of individuals out there, right? Adobe. I bought Adobe stock here today, about a $3,300 move. I got 10 shares at $329. Adobe's just kind of an easy money stock. It's hated. It's a dog stock. No one likes it. They just put up great numbers quarter in, quarter out. As long as Adobe keeps putting up great numbers quarter in, quarter out, this stock will climb right back to $500, $600. Like they just got to continue to put up numbers, because eventually the whole bearish narrative around the stock will go away. Like it'll just go away. That's just that's what happened with Google. Google just kept putting up the numbers, and then eventually people said, you know what, like we got to give up on this whole negative angle on Google. Like, and that just happened. And so that will happen with Adobe as long as they keep coming in through and putting up great numbers. This one might shock a lot of people, this next move. I bought 100 shares of SoFi here today, right? That might be shocking to a lot of individuals because SoFi has gone up so much from when I was buying that stock at $6 to now being at $27. But when it comes to SoFi, ladies and gentlemen, like my view on SoFi is I believe that company has the ability to become a financial giant, right? So when we're talking about financial giants, we're talking about companies with hundreds of billions of dollars in market cap. That's why I think SoFi has the ability to go long term. And so for me, looking at SoFi, I'm like, yeah, the stock's gone up a lot since I bought it, but if they really become a financial giant, like this will all be actually small money in the end, right? And we could look at Palantir. Palantir was a $6 stock, and then it was $27, right? And you could have said, oh gosh, like Palantir's gone up so much. It was $6, now it's $27. Like, ugh, can't buy that stock anymore. It's gone up so much, right? I mean, now people pay $170 for it. Just a couple of weeks ago, people were paying over $200 for it. So at the end of the day, like if SoFi just keeps coming in with great numbers and they become that financial giant, like $27 long term could look like a great price, right? Obviously, it won't be like a joke price like when I got it for $6, but still. Next stock up here. Celsius Holdings, energy drink company. I bought 100 shares. It was a little over $4,000 move. Bought those shares at $40.73 here today. The earnings were phenomenal. I love the whole direction that company's going in. They're on their way to becoming a drink giant. There's no question in my mind. And so I don't know what else to say other than the stock's a buy. The stock's on its way to $100 a share. Next one, almost a $7,000 buy here is American Express. I bought 20 shares here today, $348 I paid for this one. Just a great company that you can just count on, like coming through. You think you got to understand about American Express. There's a lot of things you got to understand about American Express, but American Express is really built around a membership model. So the way I would think about American Express, think about them much more like a Costco, where Costco has their membership model, right? People pay their membership, and that's where they get a lot of their profit from. Think about that kind of like American Express, like people pay that membership and they can get a lot of profit from that. And then people go to Costco and they can make money by obviously they make margin on pretty much everything they sell. So, and then American Express can make money off of all the fees, right? It could be credit card interest fees, or it could be like merchant fees and things like that. So it's a beautiful model. Like it's absolutely genius what American Express has going on there. And they have a very loyal customer base, kind of like a Costco, right? And, yeah, like American Express, just a great stock. And I spoke about American Express in a couple videos recently here on the main channel. One is this members only video. This is for the people that are the members that support the channel here. Brand new stock I'm going to buy. That was a 20-minute video that spoke in depth about American Express there. And then this video, that was a public video where everybody could watch it. I just bought a new stock. That one also spoke in depth about American Express. I do make some points in this video, this members only video there, that I don't make in this video. So do keep that in mind. But man, like what a great opportunity American Express is. Next stock up here, 10 shares I bought. CRM, Salesforce, $238 I paid for those shares. Benioff, we trust that gentleman. Easy money buy. I bought 10 shares of Amazon here today. I continue to buy Amazon. I've been buying Amazon since 2022. And I just continue to load up on shares. Like that's just one you can hold for the next 10, 20 years and just feel very, very comfortable and make a ton of money. Like, you know how much money you're going to spend on Amazon over the next 10, 20 years? Like, can you imagine that? Like, why would you not want to own that stock, right? It's at an attractive valuation, and like they just have so much revenue growth from the ads business, AWS, and from the e-commerce business. Like, you got to own it. This is actually a pretty big buy. This was a very big buy for me. I bought 3,000 shares of Honest, HNST here today. About a $7,400 move. I got those shares at $2.46. Like, Honest, I would say for stocks under $1 billion market cap, the most disrespected best deal in the market under $1 billion. I cannot find a better stock to buy with under $1 billion market cap in terms of risk reward. Like, how much risk am I actually taking that stock? How much reward potential does it have over the next 3 to 7 years? Like, I can't find anything better than Honest. Like, Honest is the king. Like, look at that income statement, balance sheet. They're right sizing the business. Like, oh my gosh, like it's just brilliant. And so, people going to miss a big opportunity there, in my opinion, but we'll see, right? Estee Lauder, like what an opportunity this stock has been. It's now a big money maker for us. It's still a buy. That's the thing. I've already started to make a lot of money on EL, and it's still a buy. I bought, this is a big boy move here today, $8,700 plus of Estee Lauder. I bought 100 shares, $87.56. I paid for those shares. That stock remains a buy, ladies and gentlemen. Nike, $6,300 move here. 63.35. I saw something interesting in regards to Nike I thought was worth mentioning. Steph Curry and Under Armour have broken up. What a waste of a relationship, in my opinion, that was. Like, I think Steph Curry banked on he was going to sign with Under Armour. He was going to boost the whole brand. Like, the stock price was going to go crazy. He was probably going to make a bunch of money off the stock, and man, it just didn't work out. And so now he broke up with Under Armour, right? And this went viral on the internet is basically he was seen pregame wearing a pair of Nikes. How about that, man? How about that? Nike Kobe 6s. And some people wouldn't even know he was an Under Armour athlete because you know why? He's got Nike symbols all over him all these years, right? And, it just shows you like Nike has got it down, man. Look at Jordan Brand. Like you wouldn't even know he was wearing Under Armours because he's got Nike all over him, right? So Nike's just, man, they got it down. They got every angle you could ever imagine. Next one up here, PayPal. Bought 100 shares of PayPal here today, $6,200 move. Got those shares at $62.30. Such a hated stock, such a beaten down dog stock, right? Big news happened here today in regards to PayPal. You know what it was? They just announced they're going to sell off a massive amount of their buy now, pay later business in terms of the actual loans to a company specifically for the European side of the business. And this is a similar announcement that they had back in 2023. And the reason it's so big is this keeps PayPal an asset-light business model. PayPal does not want to be a bank, right? They want to be a fintech. They want to be asset-light. They want to be higher margin, higher growth, higher revenue, right? They don't really want to take a big risk on all these buy now, pay later loans. So they go ahead and sell off that business to somebody else and they can deal with that, right? Next one I bought here is Cheesecake Factory, 100 shares here today, $44.55. I paid for those ones. A little under a $4,500 move in regards to cake. If you want to hear me talk more about cake, I believe that was one of the stocks I featured on this video that I released 2 weeks ago. 4 stocks to buy now, November 2025 edition. So you can hear me talk more in depth about cake, okay? A lot of drama going on short term in the market. It's going to be what it's going to be. You can't control whether the market goes up or down in the short term. Neither can I. None of us can. But you got to focus on the long term. We know where does the market go over the long term? It goes higher. We know where do great companies go over the long term? Higher. There's a lot of opportunities in the market to take advantage of over this next year, and we got to be there to take advantage. But you got to know what you're doing in this game. You don't know what you're doing, you aren't running your projections, you aren't running your numbers, you don't understand the income statements, balance sheets, you're going to be in a world of hurt, ladies and gentlemen. You're going to probably get in the wrong stocks. You're going to probably sell at the wrong times. You're probably not going to buy at the right times because you're not playing the game based upon fundamentals. You're playing the game based upon like throwing darts at a dartboard. You do not want to do that, ladies and gentlemen, okay? So make sure you take advantage of that Black Friday sale we're going to have for 1000X to sign up for the sign-up list. That will be pinned comment in there. Enter in your name, email, enter in your phone number. Because if you just put your email, your inbox is going to be flooded with crap. Black Friday, you're probably not going to see it. And you're going to miss a huge deal going on there. And you do not want to miss that sale because we're not going to do another sale on 1000X for quite some time. So make sure you guys take advantage of that. We'll have a deal for a monthly membership. We'll also have a deal for a 3-year membership. And then we will send your Steel card to you. Much love and have a great day.